Cathie Wood's ARK ETF missed out on around $1 billion in potential returns by selling Nvidia stocks prematurely. In the fourth quarter of 2022, ARK Invest sold 859,000 shares of Nvidia when the stock was trading below $150 per share. The bulk of the sales occurred before the release of ChatGPT by OpenAI, which helped to spark a massive AI rally in the market. So this decision of selling Nvidia cost ARK ETF approximately $850 million in unrealized gain, as Nvidia stock later went up by approximately 650% to about $1,010 a share. Additional sales in early 2023 further increased their loss on the potential return of the stock. In February 2023, Cathie Wood expressed concerns about Nvidia's valuation, deeming it too high relative to ARK ETF's investment criteria. Cathie Wood highlighted Nvidia's cyclical stock nature and potential inventory correction due to the over-ordering of GPUs. She was saying some company double-ordered and some triple-ordered, but what's the outcome, right? Nvidia's market value surged from $575 billion in February 2023 when she made the remark to right now approximately $2.8 trillion. Right? So the company is currently ranked number 3 in the US stock market in terms of the market cap. So what's causing the outstanding performance of Nvidia? Nvidia's GPU has been dominating the market, especially in the data center GPU market, most of it being related to AI sectors. Nvidia accounted for about 98% of data center GPU spending in 2023, with an expected 94% market share in 2024. So there is an expected decrease of market share, right, from 98 to 94%. Furthermore, Nvidia captured 92% of spending on data center GPUs used for generative AI workloads in 2023. So those workloads including things like ChatGPT, right? Generative AI. Even though the market share of Nvidia is expected to go down by 4% to 94%, losing some market share to its competitors, but you got to remember the size of the market as a whole is still expected to grow due to GPU's superior performance compared to CPUs. The GPU's computational performance has been doubling every year, as shown in this chart. So it has achieved 1,000 times increase over the past decade. In contrast, single-threaded CPU performance has improved at a slower rate, with only about 1.5% performance boost every year historically, and more recently, the performance increase has decreased to 1.1 times per year. So as the demand for AI gets higher and higher, the demand for CPU will have to continue to grow to satisfy the computational power requirement of the AI. And what's very interesting is that in the recent report from Dell, their COO said in the earnings call that when you look at the composition of our AI server backlog, is primarily Nvidia based. It's continuing to build every quarter. So Dell, being a assembler of technology, right? They don't make any chips, but they assemble using other companies' CPU, GPU, and whatever to build PCs, to build server farms, right? And they're saying their AI server farm backlogs are primarily Nvidia based. So this confirms the dominance of Nvidia in the AI data center market. And Nvidia's Q1 2025 fiscal year report was released recently. It showcased a 262% gain in the total revenue. to right now at $26 billion of revenue, primarily driven by data center product demand for AIs. And the company is forecasting $28 billion in next quarter, surpassing the expectation from the Wall Street. And in that quarter, data center revenue was $22.6 billion, as shown over here. It represents a 427% increase compared to the same time last year. Right? This was Q1 fiscal year 2024 in terms of data center revenue, and this is the recent Q1 in fiscal year 2025. We can see a significant growth in the data center revenue. So it seems like 2025 is going to be another super strong year for Nvidia. So as a conclusion, Cathie Wood's ARK ETF apparently misjudged the AI boom and its massive demand, the market's massive demand for Nvidia GPU, leading to a missed opportunity of about $1 billion in potential return. It shows that the game of stock prediction is extremely difficult. Despite her concern of the stock, Nvidia has proven its dominance in the AI and data center GPU market, and it has driven unprecedented growth in the earnings and in the stock performance. While Nvidia's past performance is impressive, it doesn't guarantee its future return. Efficient market hypothesis says today's Nvidia's stock price has already fully reflected all available public information and is 100% efficient, meaning that the company's future performance will be solely based on the shift of the performance expectation. Meaning that the Wall Street or market's expectation on its earnings, when that fluctuate, that's going to fluctuate the company's stock in the future, because the fluctuation in the expectation will affect the company's discounted cash flow, which is the major valuation method of any stock to show the company's intrinsic value. So if in the future the expectation of the company performance continue to go up, the stock can continue to go up and do well. And if it goes down, the stock price will suffer. For retail investors, it is important to stay diversified. If you decide to stock pick and buy high conviction stocks, please be mindful of the weighting of individual stocks in your portfolio, so that you don't expose yourself to too much risks. Thank you very much. Please don't forget to subscribe.